Hello, how do you determine a reasonable compensation to pay your shareholders that are employees of your S Corp? Well, if you have an L.L.C that is taxed as an S Corp and you file Form 1120S for the business tax, and you have an S Corp, well, assuming that you have shareholders that are employees of your business, including yourself, how do you determine that reasonable compensation to pay yourself and those officers? So there is three things you should take into consideration. The first thing would be the record of services performed by those shareholders, employees, a record of the services performed by non-shareholders, employees, and then your business capital and equipment. So let's talk about services performed by non-shareholders, employees, and then we'll talk about services performed by shareholders, employees, and then administrative work and other way you can evaluate the reasonable compensation to pay your officers. And if I forget something, I'll take a peek at my note here. So we talk about those three things you should take into consideration. So services performed by non-shareholders, employees. So the gross receipts from services performed by non-shareholders, employees. So if employees in your company, in your S Corp, that are not shareholders, perform services in your company that generate revenue. So if the gross receipt, and by gross receipt is the gross revenue of the business, so if the gross receipts are generated by the services performed by the non-shareholders, employees in your S Corp, then your shareholders, employees, should not collect wages or any payment you make to them. You could classify that as a non-wage distribution that is not subject to employment and unemployment taxes, because they are shareholders but they are not generating revenue for your business. That's just one factor there to consider. Who is really generating revenue for your business? Your shareholders or your employees that are not shareholders? If they are the employees that are not shareholders are the reason why you are making money, then those shareholders, the distribution they are collecting could be treated as just distribution that are not wages. So you are not going to collect employment taxes out of those distributions. So gross receipt generated by shareholders, employees. So if your shareholders, employees of your S Corp, and by the way, if the distribution you are paying, going back to what I said, the first things that I talked about, the gross receipt generated by services performed by the non-shareholders, employees, in that sense, distribution that you are paying to your shareholders, employees, you don't even consider them for tax purposes, for unemployment tax purposes. You don't consider those shareholders as employees of your business. They are shareholders, but they are not employees. So the way the distribution is not wages, but it's non-wage distribution and not subject to employment taxes. So gross receipts from services or generated by services performed by shareholders, employees. Let's talk about that a little bit. So if the shareholders, employees of your business, of your S Corp, the service they perform generates revenue for your business, Well, they should be considered employees and get paid salaries because the work they perform in your NESCOP is generating revenue. So if the gross receipt is tied to those services they perform, what they collect from your business as distribution should be salaries. Now, non-wage distribution, it should be salaries and subject to employment and unemployment taxes. So you have to really pay attention to who is creating money in your NESCOP. And when you are doing that, you have to pay attention to administrative work as well. So who is doing the administrative work? So let's talk about the administrative work. That's the third portion of it. So if the shareholders, employees of your S-Corp are performing administrative work, like they are managers, officers, and they are assisting non-shareholders, employees, and the asset of your business to generate revenue, you have to consider the administrative work and pay them salary. So what they are collecting from the business as distribution should be their salary and subject to employment taxes. And the fourth thing you should consider as well when calculating the reasonable compensation to pay your officers, you have to evaluate, you have to take into consideration their degree, their professional experience, and the amount of time, the number of hours they spend on your business, and the duty they perform in your business. Also, you need to take into consideration what will they get paid if they're working for a similar employer. They were hired as an employee. How much will they get paid for a similar job performed in the same industry for another company? So you have to take that into consideration. And also you can come up with a formula to calculate your compensation as well, and you need to take into consideration the agreement you all agree upon at the start of the business to see what you all agree on for compensation. So you have to take all those things in factor. There will be the other factors that you take into consideration to calculate and evaluate what you can call a reasonable compensation to pay yourself as a shareholder, employer of the business, and the other shareholders, employees of your business. So first, if you have other employees that you hire, and then you have the shareholders that are working in the business, you need to really have a good record of who is doing what and who is driving sales and who is generating revenue for your business. And if the employees that are now shareholders are the one making money, you have to see if the officers that are shareholders are performing a lot of administrative work that is allowing those employees that are now shareholders to do their job and generate more revenue. So that means those officers need to collect salary as well. And you have to take into consideration, among the other factors that we are talking about, you have to take into consideration how much you are paying your non-shareholders employee, because you shouldn't be paying your officers if they are performing like administrative work in the business to assist the non-shareholders employees. You shouldn't be paying your officers less than you are paying your employees, so that they can collect other sort of distribution that are not subject to employment taxes. So you have to pay them reasonably for their work, depending on why they are, whether it's administrative or they are the one generating revenue, sales for the business. And then when there is excess to distribute, that part of the distribution could be a non-wage distribution that is not subject to employment or unemployment tax. But they have to collect their salary first. and that should be higher than the non-wage distribution that they are collecting. So if you make the salary higher than the non-wage distribution, there is no red flag that you can raise for your business. But if the salaries are lower and what they are collecting for distribution, non-wage distribution like dividend is higher, then IRS might try to look at how much they are getting paid to see if they are getting paid well for the position they occupy in your business, their degree. It's not that they are going to go that far, but if you are audited, well, you have to prove why you are paying your officers low compared to your employee, and then they are collecting, a large portion of your network, your business net income as dividends. So to avoid those red flags, is good you pay them good salary, but then they can collect the rest as non-wage distribution. So thank you so much for watching. I'm Afiavi Ojune Liberman, creators of Liberman Consulting L.L.C YouTube channel and owners of our blog ninassoap.com and our natural products ninassoap.com and our custom apparel store label.com. And I can tell you about our next co-op. The sole employee, shareholder and employee, and little by little my other shareholders, which are members of the families, they are putting a little bit of their time into the business, and I'm recording their time. I'll ask them, whether they're my children or my husband, I'll ask them to track the number of hours they spend on the business, so that I can evaluate that and see if that is really if is enough of time that I can say they are active on the business and what sort of work they are doing for the business. I have to take all that into consideration. But before they can collect any sort of distribution as a shareholder, I have to see if they are active on the business and should consider and should collect some sort of salary before they get distribution. Because if they are not active in the business, they can collect distribution, or if there is a loss, the loss could go on their schedule E. If they are not active, they can collect distribution, and their loss cannot really go on their 1040. Like my husband, our loss from the S corp does not go on our 1040 because he's not active on the business. But once he started to get to spend more time on the business, then he could claim his share of loss on our 1040, and he can collect salaries as well, depending on what he works on. He can collect salary, and he can collect some other sort of distribution, assuming that his salary is higher than the distribution. And if we have a loss, he could also claim that loss on our tax. And last year, we have a loss from the S corp, and my share of the loss went on our tax return. His share of the loss didn't go on our tax return. We have joint tax return, and then I collect his salary as well, not a non-wage distribution, but a salary. And that was the first time that I wanted to pay myself something from the business, and I did that. So just when you have shareholders that are working for you, and then you have employees, just see who is making you money to see how you should pay those shareholders, whether they should collect non-wage distribution or wage distribution. But if you are going to pay both, make sure that the wages you pay them are higher or exceed the non-wage distribution, to avoid a red flag, unnecessary red flag to your business. Thank you for watching.